Hey guys, how are you tonight? How are you, David?
Doing all right.
Good.
Hey.
I'm Monica Brito, and this is my husband, David, and we're from ThatSimpleLife.com. And tonight we just wanted to talk to you really quickly about mortgages, and specifically buying your first house. How much money do you need down? And creative ways to save money for that down payment, because in certain states it's not as easy as others.
Yeah.
So first off, just some quick bullet points about different kinds of loans that are available, and I'll just explain really briefly what each of those loans do. So number one, ideally you want to put 20% down on a house. How much money did you think you needed down on a house?
20.
Old schooler. So ideally you want to put 20% down on a house. And the reason for that is because of private mortgage insurance, otherwise known as PMI. And what PMI is basically an insurance that protects the lender in the event of you defaulting on the loan. So if you have 20% down, you don't have to pay PMI. But sometimes when we're looking to buy our first homes, we don't have 20% down, especially in here in California. Like, what's 20% down on a $500,000 house?
100 grand.
100 grand. So, for especially like for young couples, it's really hard to save up that money unless they have like help from their parents or something. So there are other ways to save up for a down payment less than 20% down. Let's talk about the next loans, 10% or 5% down. Now, those are still conventional, traditional loans, but they require less down payment. So it would mean that you pay less private mortgage insurance, not as much as you would on a 10%, you would pay less private mortgage insurance than a 5%. So that's another option if you have 5 or 10% down. The third one is 3.5% down. Now, this would be a loan from the FHA, and it's a government-backed loan. Now, the only bad thing about an FHA loan is there are housing price limits, so you can only borrow up to a certain amount. But if you only have 3.5% down, it is a great option, and there is PMI on it, but it's the same for everybody. So it's a percentage, the same percentage for everybody, no matter what your credit situation or your income situation is. The next one is a little different. It's a 1% down loan. And this is a loan that we actually offer at our company. It's 1% down, and then the lender actually gifts you the additional 2%. So you'll have a total of 3% down when you're done. So it's a pretty awesome loan. The only downside is that there are income limits in certain areas, but not in all areas. There's some areas with no income limits. So be sure to ask me about that loan, because I think I can help you figure it all out depending on what area you want to live in. So let's talk a little bit about how to save money for a down payment. Now, we all know it's tax season. Bleh.
Yeah, get it there.
But for some, tax season means an awesome tax return. So why not put that all in a separate account so that you have a little bit of money put aside? The other thing I like to do is I like to have different accounts for different purposes. So if you get paid on a direct deposit type basis, then you can allocate a certain amount of your check every week or every 2 weeks and put it automatically into that savings account. And before you know it, you've got money.
You get some money.
The other way that you can get some extra money is getting a side gig. Now, I know you don't want to work an extra job, right? But there are so many ways to make money online now that are all about taking your passion, what you love to do, and monetizing on it. And if you want some strategies on how to do that, feel free to contact me, because I definitely can help you brainstorm some ideas for having a side gig of something that you love to do. Now, as a last resort, and this one I don't recommend unless you have to, but if you need to, you can always borrow from your employer's retirement plan. Now, I don't know much about this, so I'm handing it off to this guy.
I'll talk a little bit about that. So you can always borrow money from your employer's retirement plan. So your current employer, so if you've separated employment, there is no borrowing, you must take a withdrawal. And if you're under 59 and a half, there's a 10% penalty from the IRS. So you'd have to weigh those options. But if you are currently employed with your employer's retirement plan, you're allowed to borrow money from your retirement plan, pay yourself back with interest. You get that interest, not the employer's plan. So you pay yourself back. It's around 5 to 5.5% right now. There's two types of loans: general purpose, up to 5 years. You can borrow money for any reason, pay yourself back every 2 weeks. The other one is for the purchase of a primary residence. Most of the time that'll turn that into a 15-year loan. I would check with your employer's retirement plan for specific guidelines. I'm giving you some generalizations, but you'd be able to borrow half the money in your retirement plan up to a maximum of $50,000. So obviously you'd have to have $100,000 to borrow the $50,000. But if you pulled out like $20,000 for a down payment, paying it back over 15 years is very affordable. So you may want to look into that. What you're doing really is using one asset to fund another asset, your retirement plan to the house. But you may want to do your own research on your retirement plan specifics so that you know what to expect.
So I guess that's it tonight, guys. If you guys are looking to buy a house or you're ready to start saving up for that down payment, feel free to contact me. We also help you guys get out of debt or help you come up with a plan to eliminate that debt from your life. And please visit us over at thatsimplelife.com and feel free to sign up for our newsletter, as well as we will be giving you our money saving tips and tricks on a weekly basis. So thank you so much, and join us next week at 7 p.m. for our little casual chat.
Well, we'll have wine next time.
He's only saying that because we're not having wine this week.
Yeah.
Look it up, ShaleneJohnson131diet.com.
Yeah.
You'll see why we're not having wine this week.
It'll be Wine Wednesday.
All right. Thanks, guys, again. Bye.